Good morning. It's the 13th of July. I'm Joe Neighbour from Signal Centre. Just me today. I've been abandoned by the other two. Jamie taking a couple of days break, and Steve is still off for another week or so. So I'm going to rattle through the latest headlines for you all, as well as take a look at some of the charts that are most relevant at the moment and most talked about, and see if we can decipher where a few of these markets are heading next. So first of all, we're going to start off with the latest headlines, and there are a fair few of them today to get through. Starting off with the German economic fears continuing. The German ZEW Economic Sentiment Index dipped sharply yesterday to minus 53.8 from minus 28 previously, and that was well below the expectations of minus 38.3. In terms of what's going on with the US, we saw the US Small Business Confidence Index retreat to 89.5 for June from a previous reading of 93.1. We've seen oil dip quite sharply as well. That came under heavy selling pressure yesterday, trading at 3-month lows on the Brent contract. Lower oil prices fueled some hopes that inflation pressures had peaked, and we'll get a bit of an indication of that later on today when we have the US CPI release. In terms of Treasury yields, they regained some ground on Monday, with the 10-year dipping below the 3% level, with the furthest net retreat to 2.96%. We've seen a marginal correction in the dollar. Not sure I'd get too excited about that. However, we did touch fresh 19-year highs yesterday as Euro US dollar reached the parity level, which has obviously been well watched and well touted for some time now. In terms of the UK, we had stronger GDP data today that recorded a 0.5% increase compared to the consensus forecast of a 0.1% increase. So we're seeing sterling move higher today. As mentioned a little while ago, the key US CPI release is due out today. And it will be very important for market expectations, particularly surrounding Federal Reserve policy. The data will also be a substantial impact across all asset classes. The consensus expectations are for the headline rate to increase to 8.8% from 8.6% previously. So keep an eye out for that number later today at 1:30 UK time, to give you a bit of an indication on where markets could head from there. Substantial Bank of Canada rate hike is expected. That's also out today, and that's out 3 o'clock UK time. They'll announce their latest interest rate decision. The consensus forecast is for a sharp increase of 75 basis points, taking the overall rate to 2.25%. So again, worthwhile keeping an eye out for that, particularly if you've got any exposure to commodities or to the Canadian dollar itself. And finally, the Royal Bank of New Zealand hike rate to 2.5%. This happened overnight, and that was in line with the consensus forecast, so very much expected on that front. So let's get stuck into the charts, starting off with the dollar index, as that is really the main asset class at the minute, driving a lot of what we're seeing in the markets, and it remains the number one asset to own out there, outperforming pretty much everything as things stand. Now, as we talked about, there was a minor correction yesterday, and it really was only minor. As you can see on the daily chart here, we posted a doji candle just in front of this resistance at 108.74. We're slightly on the back foot today, but no real cause for concern there, I don't think. If we are to get any sort of correction in the dollar index, it is likely just to be a healthy one, shake out some of the excess that's probably in the market at the moment, and maybe allow the dip buyers to re-enter. So first port of call on the downside would be around 105.77, but overall it looks very strong, and there are no signs of any reversals just yet. The market that was well watched yesterday, as well as the dollar index, was Euro US dollar, because it actually briefly touched the parity level where it was on a 1-for-1 basis. And it seemed as though everybody in my Twitter feed and LinkedIn profile was sitting there ready to press enter as soon as that happened. So that kind of psychological impact of everybody watching this level seems to have done a pretty good job of acting as support. Often these big psychological numbers do have that impact. And yesterday, as we did with the dollar index, we posted a doji candle. So we're on the front foot today, only up by 0.07%. So it's hardly, any huge reaction to the upside. But what I would imagine is that there are probably a lot of stop losses below this parity level, and if triggered, could actually result in further selling quite aggressively to the downside. So do keep an eye out for that. But at the moment, it seems as though the bulls are trying to defend this parity level. So we may see a little bit of a corrective bounce in euro US dollar, but it's very highly speculative at this point. And obviously with the CPI data due out today, we do need to be careful with that. Looking at cable, that continues to hold support around 118.75. We had a little bit of a look below it, but actually closed above that level, although we did post minor losses on the day. So still very much under pressure. Seen a little bit of a bounce in sterling today off the back of that stronger than expected GDP number. So we'll have to wait and see if there is any follow through to the upside on that. I think we need to take out the high here from the 8th of July, really, for any real excitement to be seen on that, and that's at 120.56. And even then, it's only likely to be a very short-term corrective move to the upside. Okay, not going to go too much further into currencies just because it's me alone today and I want to get as many assets in as I can. So let's take a quick look at Bitcoin. We discussed this yesterday and it's actually broken down through this triangle pattern, indicating that we may see lower prices emerge in line with the dominant trend on this one. Over the short to medium term. We are on the front foot today, up by 1.2%, but maybe this is just a retest of the broken short-term uptrend that we've got here. So do keep an eye out for that and whether or not we get any further selling pressure there. If we look at Ethereum, it's a similar situation, although the breakdown has actually been a fair bit more aggressive on this one. We actually broke the triangle pattern a couple of sessions ago and backed that up with further losses yesterday. We're outperforming Bitcoin as things stand, up by 2.34% at the moment. But ultimately, I believe we are set to see lower prices in line with the dominant trend. And in order to change that view, we really need to see a break of this resistance level up here at 1282. And that may then confirm either a double or a triple bottom potentially, all very speculative at this stage. Moving on to commodities, because there was some pretty wild price action yesterday, particularly in some of the oil contracts. So this is WTI, and it's formed a big range on the daily chart. Looks as though it could be in the process of forming a double top. Now, in order to confirm that, we need to see a break of this support band here. The lowest level which I've got is at 92.29. So if we can take that out on a closing basis on the daily chart, then that could set us up for further losses on oil. President Biden yesterday putting the OPEC nations under a bit of pressure to try and get them to increase their oil output in order to ease the energy crisis. So there are some signs here that we could be topping out on oil and start to see prices decline over the short to medium term, which of course would be a relief for a lot of us that are obviously battling against higher energy costs. So keeping an eye on that at the moment. The level is being clearly defended as things stand at the moment. And we've seen a decent-ish bounce from this band of support. So we'll have to wait and see if the bulls have got the desire to push this up. Big red candle yesterday, as you can see. And again, worthwhile noting from a data perspective, at 3:30 today, we've got the latest read on the US EIA crude inventory data. Looking at gold next, we continue to see that fall to the downside, and it's now hit this support level at 1722 that we've highlighted. It's a previous swing low from back in September 2021. So we're seeing prices stall very briefly at this level. I would say we're up on the day, but looking at things, we're pretty much flat, only up by 0.02% as things stand. So we could really do with that bouncing pretty soon. But of course, that's going to be tied to what the dollar index does, which at the moment, as we know, is rampant. But that's also into resistance as well. So potentially, we could see a bit of relief here on gold, as it has been, a pretty poor performer for some time now. Looking at silver, a similar situation, that it's holding a very large support level. We've got a 61.8% Fibonacci retracement level of this entire move that started at the beginning or at the start of the pandemic. And we've also highlighted this horizontal level in yellow. And as things stand, we're holding it for now. So from a speculative point of view, that's one that I quite fancy as well, just given that this support level is holding up quite nicely. And we've got dollar index at resistance. So maybe scope for a bit of a correction on this one. Only think we're going to get up to this kind of zone really. I think upside ultimately is going to be capped around 20.45, but if you are a speculator or a scalper, then maybe you want to consider this one, because I think the risk reward probably looks quite reasonable, given that we can have a stop just below that support, looking to target that resistance, and you've got around about 3.87 risk reward ratio on that one today. Let's take a quick look at copper. That continues to sell off pretty aggressively as well yesterday. Formed a pretty large top here. All this price action contained within a range. Then we saw a big breakdown and prices have continued to slide lower, actually closing below the low that we posted on the 6th of July and fast approaching the 61.8% fib level, which comes in at 313.71. So that could be a level to keep an eye out for if you are considering speculative longs on copper, but ultimately I think the trend has now shifted bearish, and the bias is for lower prices, but that obviously doesn't rule out any sort of corrective bounce. Okay, let's move this on to the indices then, and starting off with the German index, the DAX. We continue to see prices be supported by this support at 12,431. Decent bounce emerged over the 5th and 6th of July. Not really been much in the way of follow through to the upside. They seem to be in a bit of limbo at the minute and not really going too far in any direction. If we take a look at the UK market, this is heavily correlated to the US dollar, also to the price of oil and banking shares. So really a terrible market, to be honest, if you are a trader. I'm sure you've noticed this anyway, but it just really is pretty sideways stuff, to be totally honest, with a lot of the different sectors within the index cancelling each other out due to the weighting influences that they have. So if we look at price action over the last few sessions, if we just zoom in, you can see a number of doji style candles that have been forming. Bit of weakness today. We do seem to have the underside of this 50% fib level maybe doing a bit of a job of resistance, but it's a pretty weak signal if I'm totally honest, and overall it's not my favorite market, so I'd be avoiding that for now. Looking at NASDAQ next, similar sort of pattern to what we saw in the cryptocurrencies actually, in that we're forming this kind of triangle situation. If we break to the upside above 12,225, then that could lead to further upside in the very short term, although any upside move is only likely to be a corrective one at this stage. If we see a break to the downside of this triangle, then it's likely to lead to further losses towards that 61.8% fib at 10,500. And given that the dominant trend at the moment is bearish, that would probably be the preference for me, is for a break of that triangle to the downside. Looking at the S&P, again, we've got this same triangle, but we're a bit closer actually to challenging the lower end of that. We've got a large head and shoulders top pattern, which has been forming over many, many months. So that is dictating the overall trend. We are looking for lower prices, a break of this triangle, and we could be headed towards this 50% fib level at 3,500. The measured move of the head and shoulders top pattern, so the measurement from the high of the head down to where I've suggested the neckline is, and project that lower. Actually, we've got the broken neckline there, projected it lower. That comes in at 3,333. So still looking for lower prices there on the S&P. Finally, the Dow, that's trading within a bit of a bearish channel. Again, you can make out the triangle here that is relevant on all of the US indices, it seems, at the minute. We haven't broken it yet, but if we do get a break to the downside, then we will probably be looking for a retest of these lows that we posted on the 17th of June, which currently come in at 29,672. So that's that. Hopefully that was useful for anybody watching. So now what I can do is move this over to the gun to the head challenge. Now, this is just a little bit of fun that me and the guys do on a daily basis. Try and pick a trade idea that we fancy for the day ahead. It's all time stamped. It's all, very upfront and honest, and there's plenty of accountability there from us being on these videos every day to stand up to winners or losers, whichever way it may be. But simply what we do is we pick a trade idea. Every idea must have a stop and a target. The ideas are placed at market, and we expire these ideas at 9 p.m. UK time, or when the stop or the target is reached. Now, in order to let people know these trade ideas and make sure that they are timestamped, we add them to our TradingView profile. So if anybody wants to check them out, you can do so here, Signal_Center. Yesterday, we did 2 trades because Jamie was here to help me out. He went long of sterling versus New Zealand dollar. Had a pretty tight stop loss on that, and sadly that one didn't work out. However, it has actually gone on to go and hit the target, but just gives you an indication of the sort of volatility that's present in the market at the minute. And for me, I was trading this break of this triangle pattern on Bitcoin. And I was on side by about 0.5 R. So my stop loss, I was risking 1%, and I made 0.5% effectively on Bitcoin yesterday. Still quite fancy that actually. Still looks pretty good. So I'll tell you what I might do. I might even back that up again and go again and reload the gun on Bitcoin. So let's just bring up the chart. It was kind of that between that and NASDAQ for me today. So, I mean, I think I've talked myself out of NASDAQ just looking at it from a daily perspective because we've got this triangle pattern. But I was potentially tempted by a speculative long on NASDAQ, given that we've seen some mild support form on the intraday charts here and a decent bounce. But I'm going to stick with Bitcoin for now. So this was my trade idea yesterday, looking for that break of the triangle. We've seen a break, but we've also seen a little bit of a corrective move higher. So I'll tell you what, I'm going to sell it now at the current price of 19,495. I'm still going to target this level down here, which is the swing low. Let's just put this on a 4-hour chart so we can squeeze more in. That is at 17,567, and I'm going to place a stop above yesterday's high, which comes in at 20,055. So from a risk reward perspective, which is all important when trading, you want to make sure that your winners are significantly bigger than your losers. We're looking at a risk reward ratio here of 3.47. So for every, let's say, $100 that you risk on a trade, I'll be looking to make potentially $347 in return if I am correct on this trade today. Okay, so that's my trade of the day. Now let's look at the data that's due out today, because it's a pretty busy day on the economic calendar. We've got at 1:30 UK time, the US consumer prices, the latest CPI read. Now this is going to be a well-watched number because obviously inflation is a big deal at the minute, and it is deciding Federal Reserve policy, because we want to keep that under control. Now, just in terms of the expectations here for CPI, we are expecting a headline rate to increase to 8.8%. So if we see a number that is higher than 8.8%, then that is likely to trigger potentially a sell-off in risk assets. And we may see further upside in safer haven assets like the dollar index. So do be aware of that. Do keep an eye out for that number because it is likely to be market moving. At 3 o'clock today, we've got the Bank of Canada policy decision. They're expected to move rates higher quite aggressively, as we mentioned in the headlines. The market expectation now is for a 75 basis point increase, taking the overall rate to 2.25%. So if it's under that, then we may see some relief potentially in the Canadian dollar, but we'll have to wait and see what happens there. At 3:30 UK time, we've got the US EIA crude inventory data. Oil, as we mentioned on the charts, just going to bring that up again in a moment, it is at a very crucial level. And if we get a breakdown here on the daily chart to complete potentially a double top pattern, then that may indicate that we are set for even lower oil prices over the medium term. Overnight, we've got the Australian jobs report. That's at 2:30 a.m. UK time. So, you know, based on this hot weather, you may be up at that time because you can't sleep. But just bear that in mind if you've got any exposure on Australian dollar currencies when you hit the sack later this evening. So on the 15th, we then look to the China GDP report. We've also got some retail sales and some consumer confidence index numbers, but really it's all about today with that CPI number, which is due out, as I said, at 1:30 UK time. Just back to the oil price chart. This is what I was referring to. Big potential here for a double top pattern. Needs to break below this 92.29 level on a closing basis. Big sell off yesterday. We're trying to defend this level as things stand at the minute, but we've got those oil inventory numbers out a little bit later on. So that could have an influence on this particular setup. Okay, that's it. Thank you for watching. Short and sweet today. Hopefully it was useful for you all. I'll be back tomorrow again by myself until the end of the week. So until then, guys, please trade safe and have a lovely day. Goodbye.